About 1 minute.
All right, thank you. What is up, Gumbo Nation? Glad to see some of you joining us on the stream. About to go live. Got a great show planned for you, as promised, as every week. This will be the greatest show till next week. Medium home price versus average home price. We're going to talk about that, our average sales price. Boomers, y'all are killing it. Bring that up. And then rent versus buy. Elevated rates. Maybe I should just keep renting. We'll talk about that. We even asked ChatGPT. What a joke, but we'll go over that as well. So stick around. We're going to be live in just a few. Make that a few. What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, and I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. This is your home show where for 11 plus years, providing education and options on what is or will be. I promise you, it will be your largest investment and most valuable asset. What is that? That's your home. If you're new to the show, welcome to the Gumbo Nation. Think you're going to love it. We're glad to have you here. Maybe you found us just clicking through the dials, maybe online, maybe a little water cooler talk. So many of you come, but what I want to say is to all those Gumbo Nation folks out there, keep spreading the word. Appreciate you every single day, getting to talk to folks who heard us here on radio or friends or clients that we've helped out, and I really, really appreciate that. Home away from the show, 504-207-7600. Always got somebody on standby. Or shoot an email to info@mortgagegumbo.com. The website, mortgagegumbo.com. Hey, go check that out. Tons and tons of information to help you educate yourself. You could also follow me. Hey, Google Dwayne Stein. Go on YouTube. Go to Mortgage Gumbo. You'll see, over 800 podcasts now or shows that are on there, whatever they're calling them. Go on there, educate yourself. We've even got categories in there, and we're working on that. It's a lot. So if anybody, if you know social media or IT gurus, stuff like that, hey, you know what? Send me their information at info@mortgagegumbo.com. Looking for somebody that could help out with that. Hey, on the show today, we're going to be talking about, because again, headlines. And y'all all know my thoughts on headlines. You got to be careful there, right? But median home price versus average home price, or median home sales price versus average home sales price. We'll talk about that. Baby boomers. Y'all are absolutely killing it. And y'all hold so much wealth. So I'm going to give you some staggering stats when it comes to the baby boomers, because there's some things that a lot of you may not realize, but I want to talk about that because one of the things that I do, and we do a lot of, and I'm trying to get our national rep lined up to get on a show in the next couple weeks, get him back on at least, is reverse mortgages. It's no longer a four-letter word, folks. It's no longer. Closing one Monday, closed one last week. This is something that I want you to understand. So many of you are sitting in $400,000, $500,000, $700,000 homes, yet you're worried about paying your $300 electric bill. So we'll talk about that. And then rent versus buy. Rent versus buy. Rates are elevated. Rates are up. I think I'm just going to keep renting. We're going to talk about that and kind of give you the differences. And look, a lot of it is Mickey Mouse, common sense. But I even went, and I'm thinking about starting a new segment called Ask ChatGPT, because some of this stuff is crazy. And if I had to budget for it, I'd probably go in and save TikToks every week that I see that are just absolute. You talk about fake news, misleading, a crock on some of these things that they're putting out there. So I get why there's confusion. So we're going to talk about that, rent versus buy.
Are you going to ask ChatGPT just to see how wrong the answer is going to be?
Well, I want to ask them just to get their opinion, because sometimes they give good points, but like it is so generic when I asked them this certain question about renting, and then you're like, my gosh, like if you put it in perspective, Jeremy, you're like, what is that? I mean, like, come on, you know what I'm saying? Like,
so is it like give me a level here if we're talking about like gumbo? Is it like the recipe for gumbo you get out of Wisconsin compared to the recipe for gumbo you get out of
very correct. That's a great
down to Bayou?
Yes, it's that bland, no salt, no pepper, even, right? It's just brown water soup. Right.
That could be the name of your segment.
Right.
Brown water.
Yeah, exactly. Right. Brown water. Right. Yeah. So we're going to talk about that. So, and one of the things, and the reason why y'all trust me, the reason why I work with so many sons, daughters, and brothers and sisters, and all this stuff is, and for the aunts, the uncles, the grandmas, grandpas who continue to refer over as, look, we don't pull any punches here, right? We keep it real, because that's what y'all want to know, right? You this is why you're tuning in, to get true data, get facts. And then I'm fortunate to be able to deliver it in a way where I don't keep my emotions out of it, and I'm able to look at it and present it as I am one of you, especially now having a son that's 20 years old, we're now doing this cup of gumbo, and it's taking off, and it's doing so well, and it's simply generic questions that he goes to his friends and finds out, and we don't talk about ahead of time, and so my point being is, we're building this because, and we want to talk about these things because I get rate. I understand rate. And people are like, dude, I can't believe you'll sit there and talk about the rates, and you still do rate watch, and you still do this and that. Yeah, that's why folks trust me, because we don't hide away from it. But I think what you've got to understand, for me, I am a home wealth advisor, right? And my job is to show you how to create wealth using your home. And nobody understands. Look, when rates are low, people want lower. When rates are high, people want lower. I get that. But if you have the lowest rate on the wrong strategy, it could be more expensive. And I explained that to a client yesterday who was working with someone, with company, it rhymes with Sprocket. Right? And I was explaining to her, the rate that they offer on paper looks lower than what we're talking about. But then when I explained to her what we were doing and the strategies and the whys, so many loan officers out there, and so many of these, you go online and you click and you hit this clickbait. Look, rates in 5.99. Well, how is it 5.9 when Dwayne's saying they're in the mid to upper sixes right now? Well, that's where you've got to have a conversation, because a low rate on the wrong strategy is going to cost you more than a competitive rate on the right strategy. And that is something that I, for 30 plus years, have been explaining to folks and helping them understand, because that's how you create wealth. Chasing a number on a piece of paper right now just does not make sense. So we've got to look at that. We've got to look at those tools, right? And see. And how do we do that? We put a plan in place. We don't just have you fill out an application, Gumbo Nation, and go, okay, here's where you're at. Let's look at the different programs. Let's explain the whys on each program. Can you imagine that? We give you the whys, so you have options. Because at the end of the day, my job, you're trusting me, is to provide those options as your home wealth advisor. But it's ultimately your decision. But we got to put a plan in place. We're going to show you how to use your equity. And that goes for refinances right now as well. If you've got a 2.75 rate, we're probably not going to touch that. But we'll look at a fixed second. All those variable rate HELOCs and stuff like that, guess who's calling me right now for that fixed rate second? All of you. Because of where the rates are, and they're variable, and you can't budget. So we got to put a strategy together. What are we looking at? Is that seller concessions? It's knowing what you can contribute. Knowing what the seller can do. Knowing what program allows what. And that starts with you, especially for those. It's why we have a team. It's why we have the Total Home Authority. It's why we had Colette and them in here last week. We got Jeff Lush share his team with Florida Lee, Law and Title. We've got the realtors. We've got all this put together because it's a team. We work for you. And I don't want y'all to ever get away from that. And on some of these conversations I have, well, the lender said I had to do this. No, you don't. You might have. I might say, hey, here's what you need to do if you want to get in this loan program. But I don't ever go, hey, you have to take this or else. Now, if you don't go with this particular program because of maybe your credit or lack of down payment, then the option may be not buying. But if you go, hey, I want to put down 5%, I'm not going to tell you to put down 10% and force you into something. And these are the conversations I hear every day. And it's because a lot of these lenders and a lot of these folks don't have the programs out there. So they're trying to funnel you like a cattle call into a certain area that they can operate in because they don't have the ability to roam the range, so to speak. And especially for all those listening right now with your kids and the younger generation and these first-time home buyers, we've got to get it right. We got to get it right. And look, if you're bank of mom and dad and you want to ante up, cool. That's fine. That's fine. But we want to make sure that we're getting it right and getting the right program and understanding what the whole purpose. When you buy a house, it's not timing the market, it's time in the market. That's how you build wealth. That's how you build wealth. And we're going to explain that as we go and why the rent versus buy and median sales price. That's what today's show, the premise is kind of all around that because it can be confusing. This is what I do for a living. You're great at what you do, but that's why you tune in. So it's my job to make sure I try to make it not as clear as mud and to just break it down and be as remedial as possible. All right, don't go anywhere on the other side of the break. Hey, we're going to knock out Rate Watch. Still got a lot more to come. Rent versus buying. Boomers, you absolute rock stars. Y'all are amazing. Going to explain that on the other side of the break. Don't go anywhere. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. MortgageGumbo.com. Welcome back. Mortgage Gumbo with Dwayne Stein. Hey, home away from the show. Mortgage Gumbo. .com. If you got any questions, send them in. info@mortgagegumbo.com or home away from the show 504-207-7600. You know, we're talking about always trying to create some ideas and not ideas, but ways to help out first-time home buyers and, you know, whether it's all our loan programs. Look, we've got, and I probably don't mention this enough, and we do this quite a bit. I mean, look, when we're chatting, if you're sitting there, hey, I don't have down payment, I don't know. Look, we've got DPA or down payment assistance programs, tons of them. We've got in-house programs, you know, so there's things that we can do to help you out, helping several clients out right now. We get it, right? And owning a home, better than renting, because maybe your affordability is there. You make the money. You've just not had a chance to, because of rents increasing or just life, right? Groceries more expensive, not been able to save as much as you would like. Well, let's have a conversation. Let's have a conversation about our down payment assistance programs and see if we could get you in a home. All right, want to discuss, well, you know what? Let's get into this week. What we're looking at here is initial jobless claims came out, and it's the lowest since 1969, right? And 22,000 jobless claims. If put that out over a month, you're looking at they're saying 187,000 initial jobless claims. And I told you we don't really look at that. We kind of look at what are the continuing claims, right? That's what you're looking at, because that's the folks who are actually on it. But look, you're going to see these numbers as I'm talking here. These numbers, I think, why are they going down? Well, we've been talking about this, and folks, the gig economy is real. You're like, well, what is the gig economy? Well, think about this. How many of you now, when you want to eat something, you don't get up, get in your car, and drive through the drive-through, or go pick it up? What are you doing? You're DoorDashing, right? How many of you, or let's just say us, have adult beverages, and, hey, what do? We'll call an Uber, right? So there's a lot of stuff out there. This gig economy is very, very real. And so you have less filings because folks are making money in other ways. And then also, listen, and this is a big deal. You see what's going on. And it's sickening if you're a taxpayer like I am to see the waste, the fraud, the abuse that has been going on, that is finally people are trying to put a spotlight on it or a magnifying glass. And, you know, the labor secretary is really, really cracking down on this. So there's been a lot of stuff over the last 4 or 5 years since COVID on this labor market and how people getting benefits, all this stuff. So you're seeing that. So my point being is this may continue, but it's not necessarily a doom or gloom, right? And it's because of the gig economy, right? So keep that in mind. So, man, should I buy? Should I rent? We're going to get into this. But, man, stats, the data don't lie, Gumbo Nation. It don't lie. And I think in the world we're in now with the TikToks, the Instagram, the I want it now, the immediate, people don't understand they kind of link home ownership into that as well, right? Because they hear about the 2020, 2021, and all the equity that got built. But again, home ownership, it's the time in the market, not timing the market. And as much as you want to say all these negative things that the press and all about this, folks, in Q1 of 2026, homeowners are now sitting on $18 trillion in equity. So the average homeowner has over $300,000 in equity. Listen, we know real estate is local. We're going to talk about that. We talk about that all the time. So if you bought a house for $250,000, you don't have $311,000. It's just common sense. But my point being, you have homes, negative equity homes is right at 1.9%. So that's less than 1 million homes have negative equity. You compare that to 2009. Remember, everybody, and what I kept saying on here, we ain't heading for no bubble. In 2009, remember 2009 when the market crashed? That was 27%. So even then, when the market crashed, it was 27% had negative equity. So that's why when you're hearing about these things, this is winning. And this is where we're talking about your home is that wealth building tool. And understanding that. And working with somebody that has your ideals lined up. Closed on a loan yesterday. Kid's 22 years old. Has already bought his second property. Okay, great. Maybe you're not in that situation. But let's have a conversation and find out. Don't just keep scrolling and hearing these things and reading these things. And then moms, dads, aunts, uncles, coworkers sitting around that water cooler, grandma, grandpa. Keep doing what you're doing and saying, hey, call this guy. Have a conversation. Let's find out. Because there's tons of opportunity there. So let's talk about baby boomers. Baby boomers right now, got some stats. Number one is this. More than 10,000 people every single day, and this is supposed to continue, I don't know how they do this, through 2031 or 2030, every single day, 10,000 people are reaching retirement age. Every day. So what we want to do is have a conversation with you, and as this is approaching, or maybe now you're in retirement and things have gotten a little tough. When you retired 5-10 years ago, maybe you're in your mid-70s now. Gas prices wasn't where they are right now. But do we want to look at maybe using your equity, adding that as part of your retirement strategy? Because you go, they just want you home and out. Look, we're over that. No, we don't. I can give you a million reasons why we don't. When you call, I give those. Reverse mortgage is the only non-recourse loans, which means you or your heirs are never responsible. We can't kick you out of the house. So, I mean, that's an amazing thing. But baby boomers are sitting on, in Q1, $14.92 trillion in equity. Baby boomers. Who do you think bought the most homes? They're older generation. Get out the way. Moo, huh? Get out the way. Guess who is buying more homes? Baby boomers. 42%. 4 out of 10 homes being purchased right now. Boomers. And I'm helping them with reverse purchases. But that's a whole nother ballgame. Who's selling the most homes? Boomers. 55% of homes being sold are boomers. What are they doing? They're moving to be by family. They're cashing out. They're selling their home. Who do you think controls $90 trillion in household wealth? Boomers. And these are folks who have set themselves up because time in the market, obviously, right? And I tell people this all the time, like, you can't get your first credit card and all of a sudden have your mom and dad's 20-year credit history. No, we could piggyback you off of them. But it's time in the market. And that's why so many folks, and when I say folk, meaning boomers, it's like I said earlier, every conversation I have, well, how do I know if it's right for me? We don't know unless we have a conversation. But so many, I don't know. I don't think that's right. Okay, well, maybe someone passed away. Maybe you don't want a lump sum. Maybe we set it up where you get a monthly stipend for the rest of your life. Maybe you go, hey, I want to get this amount for the next 10 years. Well, I want to leave the house to my kids. I hear you. Every kid I talk to that's somewhat decent says, Mom, Dad, live your life now. And you know who benefits? The grandkids, the kids today. Because now you're using that equity. You're feeling better about things. They benefit from that because guess what? You're heading over to the dollar store, buying them the trinkets, buying them the little stuff like my mom does. I'm 55 years old. She comes over and bringing stuff to me. So these are things that need to be looking at or considering because you're sitting on all that wealth. And I just think some of those stats are absolutely amazing. So keep up the good work. All right, on the other side of the break, we're going to knock out Rate Watch, median home price versus average home price sale, and then renting versus buying. Don't go anywhere. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-207-7600 at a home away from the show. Mortgage Gumbo. Dadcam. You're on my mind. Like it. Good job, JP. It's a good one there. You are showing your age, too. Welcome back. Listening to Mortgage Gumbo with Dwayne Stein. I am your home wealth advisor. Home away from the show, mortgagegumbo.com. Go track me down, Instagram, TikTok. Join my Facebook group, Gumbo Nation. Hey, follow a cup of gumbo. Go over to YouTube. Subscribe to Mortgage Gumbo as well. All right, let's get into our weekly segment we like to call Rate Watch. Man, Dwayne, why do you do this right now? My gosh, where the rates are elevated, the rates are this and that. Because I'll help you put together a strategy. Rates don't scare me, just like your credit don't scare me. Right? So let's get into it. Is it pretty? No. Is it the best we've ever seen? No. All these headlines, rates, highest rates in a year, blah, blah, blah. Okay. People are still buying. Folks are still buying. And have they elevated over the last couple weeks? Sure. The stuff in the Mideast is, look, we stepped in an ant pile, and now we're dealing with it. All right, 30-year conventional. Last week, 6.63. This week, 6.81. Oh. So here's my question for you. Did your lender lock you in? Has your lender had tough conversations with you? Because I do. We don't shy away from it, and we lock in those gains. We like people closer to that last week's average than sitting around going, well, I hope it gets better. 15-year last week, 6.16, 634. FHA's at 6.25 to 6.4. Same thing with VA, and Jumbo's at 6.9. The 10-year last week was 4.549. This week, 4.705. Big jumps there. A lot going on. So that's why, look, let's put together a strategy. Don't look at that and go, oh, that's it. I'm out. We all know that saying, if was a fifth, all that kind of stuff, right? Let's have that conversation. Let's see where you're at today. Let's figure out a program for you to get you in a home today. All right. Median home price versus average home price. This can be very, very, very confusing. And we talk about it all the time. Look, appreciation's going up. Right? In a little bit, we're going to talk about how rents go up, but homes are appreciating. When rent goes up, that's just more money out of your pocket. But I think median home price versus when you're looking at average home sales price, you have to understand the median is the middle. And I'm amazed folks don't understand this. So I'm taking the time to explain it to you. So, as an example, you take out the high, you take out the low. So if we got 3 home sales, 175,000, 300,000, and 600,000, your median home price is what? 300,000. Because all the headlines, median sales price down 3%. Yes, that means folks are buying less expensive houses. Doesn't mean home values are going down. So you take that same house, right? 175, 300,000, and 600,000. The median sales price is $300K. Take those same 3 numbers, 175,000, 300,000, and 600,000. Well, guess what? The average sales price is $358,000. Because when you throw in those luxury homes, right, and you throw in, what do we say? Median gives you more of an idea of what is the local market at. So this gives you a gauge on what your market's at. A home in Mandeville, in certain subdivisions of Mandeville, are more than others. A home in Thibodaux is different than a home in Laplace. Livingston is different than St. Bernard and all that. So median home price gives you a better idea. But when you see headline, median home sales price falls 3%, all that means is because rates are elevated, folks are buying a little bit less expensive house. That's all that means. And proof of this is, if you look over the last 5 years, okay, well, guess what? Median home price is up. Median home price is up close to 38% nationally. Louisiana, it's going from 210,000 to 245,000. That's up 17%. Mississippi, man, y'all are doing it right. Doing tons of loans out in Mississippi. Mississippi's up 43%. That is strong. Little old Mississippi. Laugh at us with our little casinos and this and that. They're doing it right over there, right across the border. So when you're looking at this, keep that in mind when you're seeing it. Average sales price, whatever. But it's median is what we want to be looking at. But don't get caught up in because they'll spin that headline. It just means folks are buying maybe less expensive houses naturally. It doesn't mean that home seller that sold that $245,000 house made less money. Did they make less money than somebody selling a $600,000 house? Who knows? Who knows what their appreciation was? But that's the point I want you to understand when we're getting into median home price versus average home price. It's a big difference, and I bring that up because of headline. Median's going to give you more of your market. I tell y'all this all the time, and all my buyers when I chat with them. And sellers. And by the way, listen, we're doing a ton of them. Keep calling. If you want to list your house, we help you with that at Mortgage Gumbo now. You've trusted us for 30-plus years to help you with your mortgage needs. Guess what? We can help you get that your home sold as well. We know a thing or two about it. We've been on the other side of these transactions for 30 years, so we know what's going on. But what do we say? Look outside your window. That's your market. It's that simple. 3 streets over could be a lot different than the street you're on. So that's what we've got to make sure that we are explaining and understanding. So that's median home price versus average home price, sales-wise. That can be confusing. But it just means that you take out the high and you take out the low. All right. Rent versus buy. And what you need to understand is year over year, new rents are up 1.3%. And they say, okay, well, hey, but it's up 1.3, but that's down 2.6. Confusing, right? So what they're saying is, hey, it only went up 1.3, but that's down 2.6 from last year when they raised rents. So they didn't raise them as high. So what the Fed then does is they spin this as, hey, this is good for inflation. Shelter costs is coming down. However, let's be honest. You and I, and even more so future homeowners, you're trying to decide whether to rent versus buy. So let me put in perspective. Do you want to keep paying 1.3% and losing money? And at a worst-case scenario, appreciation's 2 to 3%, which is a gain? That's what you got to kind of keep in mind. So I asked ChatGPT. I'm like, Why rent over buying? And here's I listed it out. No down payment. Well, I hear you. But I counted that with, at Mortgage Gumbo, Dad Cam, we've got down payment assistance programs and programs with no money down to seller. Closed on 2 loans yesterday. My veteran got a check back at closing. That's right. Closed on one earlier a week with USDA. Got their inspections and appraisal money back. $1,500. Here you go. Lower utility costs. That I don't quite understand. Electric bill, maybe. I don't know. Maybe because they say they throw in that maybe you rent, you don't have water. Some places. A fixed rent amount. Oh, that's fibs. That's fibs. We just talked about it. Rents go up annually. And then they got you re-upping for a whole nother year. Or if you go month to month, do they make it cheaper for you? No, I know. I know the answer's no. I hear you screaming it at the radio. No real estate taxes. All right, in theory, you're just paying it in part of the rent. No repair bills. All right, maybe that's one. Your toilet don't flush, you make a phone call. I'd rather be building equity and fix my toilet on my own or have my AC serviced, but be building equity. And then here was one that I thought was hilarious. Easy relocation. Yeah, because everybody loves doing that. Everybody loves to just, you know what, let's just move. That just doesn't happen. So I kind of find it comical when we're looking at that and looking at renting over buying. That's the best that ChatGPT can come up with. So, hey, in our last segment, we're going to tell you why you should really be considering buying, even right now in today's market. And look, a lot of this is remedial, but sometimes, man, we just got to shake that tree and help you understand. So don't go anywhere. We got one segment left, and we're going to explaining why buying is better than renting in the very last segment. You're listening to Mortgage Gumbo with Dwayne Steiner right here on iHeartRadio. Mortgage Gumbo, Dad Cam. Nice. Get those feet stomping, folks. Rent, buy versus renting. Last segment, we gave away kind of Chat GPT's idea. Couple things for you right now. So if you're paying right now, you know what? Let's ask on air right now. Chat GPT. What is average rent in Louisiana?
That's a great question.
Right? Right? What is average rent in Louisiana?
You're right to think that question.
Right? Yeah. All right, $1,500 per month in
Does
Louisiana.
it say what kind of apartment that is?
Yeah, well, it says a studio could be $900, a one-bedroom $1,081, a two-bedroom $1,267, a three-bedroom $1,569. What is average rent in New Orleans?
This is cutting edge here, folks.
Right? I mean,
Live
look, this is
AI typing on the air.
Right? I mean, $1,650. So that average rent there, that's a $250,000 home that you can afford. So my point being is, let's just make sure when we're looking at this, take that same $1,500. Heck, let's not even do that. Let's say you only pay $500 a month. Over the next 5 years, you're going to pay $30,000 of net. We told you a couple weeks ago with home appreciation, accumulative over the next 5 years is going to be anywhere from 12 to 15%. So a $300,000 house, you're going to make between $36,000 and $45,000. That enough right there gives you an idea.
Well, can I ask a question?
Of course.
Say I'm hypothetical. I'm sitting across from you from the table, and you're telling me this right now. What does that number also include? Things like homeowners insurance?
Yeah, well,
stuff like that. Are you factoring in that you may already be paying renter's insurance as part of your?
Yeah, I mean you're going to have costs, right? So a lot of this is when you're looking at it, it's to give you a baseline. And it's like anything, right? So, yeah, I mean, depending on that $250,000 house, depending on where you're at buying, may cost you less than that. It may cost you a few bucks more than that, depending on, hey, is it in a flood zone, right? There's a lot of other factors. These things are sort of generic to get an idea, right? Because at the end of the day, that's a great question, Jeremy. I can't give you, and I had this conversation with somebody yesterday. What you can afford and what you're willing to pay is two different things. Speaking to a veteran yesterday, he's pre-approved, $600,000. Don't want to, and that's fine. And the reason people trust me is I don't go, come on, man, you got to go buy that. He knows he wants his note to be within a certain range. Okay. So that's what we look at. You may have folks out there that are, hey, they understand maybe right now they're paying $1,500 a month. That's all going towards the landlord. But for $300 more for $1,800, and now I'm in I've got my own home.
So the idea that with, say, that veteran, for example, he doesn't want that amount, but
That's
at
right.
least that amount gives you the range into which, like, if he says, I can do this, but I want to pay this, you can go there and tell him, well, that range will let you do that. Or alternatively, there's no way you'll be able to get that with that loan.
That's right.
And you have to adjust your expectations accordingly.
That's right. So when we're doing that pre-approval, we're giving you a max amount, but everybody's different. Right? I mean, I say it all the time, right? Teachers maybe you got two teachers that make the same amount. They've got different debt. They've got different ambition. They've got different things. They want to live in different places. Somebody might want a $150,000 house. Somebody may want $350,000 and push their budget. So it all just depends. But at the end of the day, what you got to understand is when you're sitting there doing pros and cons of buying versus renting, yes, are rates elevated? Yes, but not one person that's buying a house right now is going to have this loan for the next 30 years. Period. So what you've got to look at is you're building long-term wealth. You're building equity. And you're doing that because you're paying yourself, not a landlord. Right? If you want to be technical, you go back to ChatGPT. Hey, well, at the end of the day, you're making your landlord. You're giving your landlord money. Right? When you're renting. And the biggest thing is the power of appreciation, building that wealth gap. Homeowners are 40% more wealthier than renters. You know what your payment's going to be. You can manage that. And you let that home work for you so it could pay you back when it's time to refinance. And that's why it comes back to what we started the show. It's working with somebody that's not just dumping a $600,000. You can afford $600,000. It's working with a wealth advisor who's going to put together the right strategy for you. Remember this, Gumbo Nation. The lowest rate on the wrong strategy is more expensive than a competitive rate on the right strategy. So let's have that conversation. MortgageGumbo.com or shoot me an email to info@mortgagegumbo.com. Till next week, Gumbo Nation, keep stirring the pot.